Hey everybody, Smart Silver Stacker here. We had a nice move up in the price of silver on Monday, up 70 cents to close above $28. I think this was at least in part because of an interview that Janet Yellen gave on CNN today. And she made the claim that without further stimulus, unemployment levels will remain elevated, and that unemployment levels would be a key metric for the new administration going forward. She also stated that she believed the new $1.9 trillion COVID relief package would help get us back to full employment levels by next year. I kind of doubt that just this bill alone is going to get us back to full employment levels. I'm not really sure that any amount of stimulus is going to help the fundamental economic problems that we're facing. But I am fairly sure that what all of the stimulus will do is inflate the money supply and eventually drive asset prices up. And if you recall, I mentioned in a recent video that Fed Chairman Jerome Powell had recently stated his intention to improve the employment situation, even if that meant keeping interest rates low and ignoring inflation. So I suspect that we'll be hearing more from the likes of Janet Yellen and Jerome Powell about how important it is to maintain this dovish, easy monetary policy because of unemployment, of course. I'm sure it has nothing to do with the fact that if money isn't pumped into the economy and more debt created and interest rates kept down in perpetuity, then our enormous debt load will become completely unserviceable and the huge asset bubbles we're experiencing will pop, and the whole financial house of cards will come crashing down. Nope, it has nothing to do with that. It's because of unemployment. That's the reason for the perpetual dovishness. And speaking of keeping interest rates down, another thing that's been in the news is rising interest rates. And if we look at the 30-day chart for the yield on the US 10-year treasury, we can see that it's moved up over 30% in that time period, which is a huge move for the 10-year note. But I'm sure that the Fed is committed to doing whatever it will take to keep interest rates down. If they go too high, it's dangerous because it could spook markets, and also, if rates rise, the massive US national debt will become impossible to service. I mentioned in a recent video that the Fed is already buying at least $120 billion in bonds each month. So if interest rates are rising despite this intervention from the Fed, just imagine the amount of debt monetization they're going to commit to in the future when rates really start to tick up. And remember, Jerome Powell said that he would be willing to allow inflation to rise in order to combat unemployment. Well, Michael Burry, who you might recognize as the investor who made a boatload of money by calling the 2008 housing crisis and who was portrayed in the movie The Big Short, recently made a pretty interesting call for Weimar-style hyperinflation here in the US. And here is a tweet that he put out the other day. The US government is inviting inflation with its MMT-tinged policies. Brisk debt to GDP and M2 increases, while retail sales and PMI stage a V recovery. Trillions more stimulus and reopening to boost demand as employee and supply chain costs skyrocket. Hashtag paradigm shift. And in this same tweet, he links to a document titled Dying of Money, Lessons of the Great German and American Inflations by Jens Parson. I'll go ahead and include that link in the description here. It's worth a read. He then went on to tweet several excerpts from this document, which I'll go ahead and read for you. The life of the inflation in its ripening stage was a paradox, which had its own unmistakable characteristics. One was the great wealth, at least of those favored by the boom. Many great fortunes sprang up overnight. The cities had an aimless and wanton youth. Prices in Germany were steady, and both business and the stock market were booming. The exchange rate of the mark against the dollar and other currencies actually rose for a time, and the mark was momentarily the strongest currency in the world on inflation's eve. Side by side with the wealth were the pockets of poverty. Greater numbers of people remained on the outside of the easy money, looking in but not able to enter. The crime rate soared. accounts of the time tell of a progressive demoralization which crept over the common people, compounded of their weariness with the breakneck pace to no visible purpose, and their fears from watching their own precarious position slip while others grew so conspicuously rich. Almost any kind of business could make money. Business failures and bankruptcies became few. The boom suspended the normal processes of natural selection, by which the non-essential and ineffective otherwise would have been culled out. Speculation alone, while adding nothing to Germany's wealth, became one of its largest activities. The fever to join in turning a quick mark infected nearly all classes. Everyone from the elevator operator up was playing the market. The volumes of turnover in securities on the Berlin Bourse became so high that the financial industry could not keep up with the paperwork, and the Bourse was obliged to close several days a week to work off the backlog. #RobinHood down. All the marks that existed in the world in the summer of 1922 were not worth enough by November of 1923 to buy a single newspaper or a tram ticket. That was the spectacular part of the collapse. But most of the real loss in money wealth had been suffered much earlier. Throughout these years, the structure was quietly building itself up for the blow. Germany's inflation cycle ran not for a year, but for 9 years, representing 8 years of gestation and only 1 year of collapse. And finally, he posted this message: "People say I didn't warn last time. I did, but no one listened. So, I warn this time. And still, no one listens. But I will have proof I warned." Well, Michael, I'm listening, and the rest of you stackers out there probably are too. If you've seen my Inflation 2021 forecast video, you know my take on this. I believe that as we see the economy begin to open up and the velocity of money begins to move in an upward direction, we're going to see significant inflation. So I think Michael Burry is definitely onto something. And that is why I am still stacking silver. If you enjoyed this video, but you'd like to see something a little more uplifting than the doom and gloom news stories about our failing economy, then check out this video I just made about a really cool gold bullion family heirloom that my grandfather picked up in Thailand more than 50 years ago. A great example of generational wealth. Thanks for watching, everyone. Don't forget to like, comment, and subscribe. I'll catch you next time. Smart Silver Stacker out.